Hi everyone. Today let's talk about the insurrection in Russia. Then we'll take a look at sentiment, as well as Max Payne for the end of the month. Then we'll get into the charts. Then we'll look at my results for the week and my thoughts going into the Monday session. And then we'll have a little jelly at the end, which is something I enjoyed outside of the markets. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Wagner Group chief Prigozhin is now set to leave for Belarus after his rebellion. He said that they were going to march on Moscow in order to remove the Russian military leaders because they were lying to Putin. And he also stated that he thought that they were launching attacks on his Wagner Group. So there was a bit of civil war, or at least infighting going on. And it does seem like that has come to an end at this point, and that he is moving over to Belarus. We'll see what happens now. Wagner Group was one of Russia's strongest forces in Ukraine, and they do seem to be losing ground under the Ukrainian offensive. So it'll be interesting to see what happens from here. He might accidentally fall out of a high-story building or eat some arsenic by accident, something like that. But at this point, it does seem like this has come to a pretty lame culmination. For a moment there, I thought we were going to see a full-blown civil war or potentially some nuclear weapons used in order to protect the Russian oligarchs and President Putin, but it does seem to be over, at least for now. They also mentioned that there's going to be no charges against Prigozhin, which is interesting. Does kind of show a little bit of weakness from Putin to not crush his adversaries, but I think it does make sense. Prigozhin is one of his closest allies, and without them, they would have lost already in Ukraine, in my opinion. And I didn't exactly want this rebellion to be successful either. You never know who the next leader in Russia would be, and they could potentially be even worse than Putin and more likely to launch nuclear weapons. Of course, the Ukraine is terrible, but so far it hasn't changed the entire global landscape like a nuclear attack would. Moving over to sentiment, bullish sentiment did pull back at least a little bit. Previous read here at the end of last week was at 45.2%, pulled back to 42.9, still above the average. Bears are still below average as well, generally indicating that we're probably going to see a continuation of pullbacks into next week, in my opinion. I still want to see a double top or a higher low setup to get that full reversal style pattern, but overall the markets are still looking very bullish. Check. Moving over to the economic calendar, Monday, not too much, just the 2-year note auction. Looking at Tuesday, building permits, consumer confidence and new home sales. Durable goods also interesting here at 8:30 on Tuesday. And then Wednesday, we have Chair Powell speaking once again at 9:30. And then very early in the morning at 2:30 on Thursday. So if you hold anything overnight, be aware of that. We also have GDP that day at 8:30, expected to be a slight tick higher from what we saw in the previous read. And then moving over to Friday, Big Friday, we have core PCE, as well as headline PCE, Michigan consumer sentiment, as well as Chicago PMI. Big focus on PCE, sitting at 4.7 for core. And previous read for headline was 4.4%. Moving over to Max Payne, this is a pretty interesting one. Max Payne is all the way down at 418, right in this little dip here. There's options all over the board. Some 525 calls. That's pretty crazy. I don't think those are going to make any money. That would be a massive push from where we are now. There's a pretty high call wall at 440. Probably not going to get above that level either. 430, potentially pushing markets lower between 421 and 430. Seems like a reasonable finish. There are some puts up here between 431 up to 441. But again, call wall at 440. And like I said, 421 to 430 does make sense for a finish. Quite a few options already in the market at 1.7 million. Put call ratio still very high at 2.3. And if we did finish in this zone, that would indicate about another $10 or 3% of potential downside here on the SPY. Moving over to the charts, starting off with the S&Ps here, you can see we got an inside candle after the very strong week that we had last week. And this is pretty bearish. Momentum stepping down, RSI also stepping down. On the shorter time frames, it could absolutely hold where it is, but on the weekly chart, it does look quite weak. You can also note that we're pretty extended from all the EMAs as well as VWAP. Moving over to the daily chart, you can see what that looked like over the course of the week, stepping down. Looking at that 21 EMA for support at this point, down at 428.85. We also have a level at 428.59, so right in this zone is where I would expect to find some support. And then we'll see whether we get a double top or a lower high type setup. I'm kind of looking at this the same way that we saw here in February, where we got overextension, pullback, slight green day, a little bit of chop, lower high setup, and then we started to pull back a little bit more fully. Once we got below the 21 EMA, you can see how extended we were. Comparing to this most recent move, very similar. Again, if we find support in the zone, set up a lower high, and then we see that continuation lower, that would be very bearish. But if we get higher highs, then the trend can continue. Moving over to the NASDAQ on the weekly chart, similarly, we got that first step down, just like the SPY, inside candle. We're kind of stuck between these trend lines, if you can even call them that. They're incredibly steep, and it doesn't seem like we're going to be able to maintain this trend. And the 9 EMA is sitting all the way down here at 14,100, about 700 points lower than what we are right now. If we don't get the continuation next week, or we start to chop in this zone, you would expect that bigger pullback, potentially down to the 21, down at 13,235. Moving over to the daily chart, you can see similar to the SPY, we are chopping at a support level. 360.44 is what I'm watching based on this current move. We have that little bit of a topping pattern coming down to retest 21 EMA, sitting down at 356. So maybe it breaks down a little bit further, finds some support, and then we get the topping type pattern. Either way, this does look quite weak. But we have looked weak before and we still got the continuation to these current levels. So you can't count out the trend quite yet. You want to see that double top or lower high setup. Moving over to the Russell, you can see that big red candle that we had after the wick from the previous week. We're now back into this consolidation area, and 179.17 seems like a solid level after this consolidation that we had basically throughout March, April, and May. We got the push out of that zone, looked quite nice, hit our price target at 189. We're now pulling back a little bit, and you can see we got into this zone previously, pulled back all the way down to 172. I don't necessarily think we're going to get that deep of a move. I think we'll probably hit VWAP maybe down at 178.25. Then we start to set up that higher low, and then we can get a little bit of a continuation. And I still think the Russell is going to outperform here, at least in the short term. It's been underperforming for quite a while versus the SPY and the NASDAQ. And looking at that daily just for a moment, you can see the gap down and the hold right at this previous high. If this is going to trend, you want it to hold above this previous high and then start to set up for that higher high. So it does need to hold basically right now to continue that trend. Moving over to the Dow on the weekly chart, you can see we got a gap down and a move lower, still holding above VWAP at 336.07. And my support level at 335.91, and it continues to establish higher lows here, waiting to see if we get a hold basically right here off of this previous low, and then we establish a higher high and start to trend out of this range that we've been in for a long time here on the Dow. Momentum, step down, RSI basically neutral at this point, and you can definitely see this continue to consolidate in this zone after it's done so for so long. If it's going to rally, it needs to hold basically right here and start to make new highs. Moving over to indicators here, you can see we did rally on copper versus gold, and then we ended up finishing the week flat with a big wick to the upside. Doesn't mean that this rally is over. Momentum still says that we're going to follow through here. Just might be that initial rejection from the 200 and these stronger levels. As long as we hold above the 9-week moving average and start to trend higher off of those levels, we are above VWAP as well. So we're starting to see some reversals in trend. Similar to what we saw in here, we got up, tested that 21, got that strong rejection, held a higher low, and then started to trend higher. If this is the initial stages of that, that would be nice. Then we could start to rally along with the SPY, confirming that move higher. Moving over to the equal weighted S&Ps versus the SPY, you can see equal weighted hit our price target 149.82, basically on the cent, which was the previous highs that we had seen. And then we pulled back all the way to VWAP and the 21 EMA. Momentum definitely pulling back, RSI at the 50 line. You'd really want to see this hold here at the 21, similar to what you've seen on previous rallies. You rally up, break those trends, retest the shorter term trends, and then we see that continuation to higher highs. Again, we want to see this confirm with the S&Ps if we are going to get that continuation. If the equal weighted continues to pull back here, that's going to be an ominous sign, and we would expect the SPY to follow through to the downside, confirming this move lower. Moving over to the ratios, starting off with the SPY divided by Russell and NASDAQ divided by SPY. You can see SPY was outperforming this week, Russell was pulling back, and we are still extended to the upside in my opinion. You can see we continue to hit overbought conditions. We now have higher prices and lower RSI on this ratio. And last time we were in the zone, we did see a pretty significant pullback, meaning that the Russell was outperforming. I do expect that to come through at least at some point on the Russell. Looking at the Dow versus SPY, similar thesis, continuing to hold this 343 level. We've been here for a couple weeks now, definitely a very important level looking at this previous consolidation before we had that larger pullback last year. And if we do get a rejection from this point, it could be pretty substantial. Moving over to SPY divided by the M2 money supply, you can see that big bar that we had getting above 21.22 last week, and then we gapped down and moved lower here this week. We're back below that level. I was really looking for a move back up to 22.05, marking the high from COVID, marking the high here in December of 21. And then if we got into that zone, that would probably be a pretty good point to sell and expect lower prices to come. We are still above the ranges that we maintained from January all the way through to December of 19. So that was a couple year period. And then before that, we were much cheaper, going all the way back to October of 2007 before the great financial crisis. And then stocks were significantly cheaper than they are now versus the M2 money supply. And at this point, it does seem like we're getting a little bit expensive and that we should expect to start pulling back. Moving over to the NASDAQ divided by the M2 money supply. I don't usually look at this chart, but I did want to show it here. You can see we got above this most recent level going back to February of 21. Again, looking to that most recent high from November of 21, up at 78.04. And to give this some context, I wanted to zoom out and you can see where we were during the dot-com bubble. The peak up around 100. And we are currently here, right at that 72 area, just above the neckline from this high, lower high setup before we had that bigger move down. And we've never really been able to maintain levels this high on NASDAQ divided by M2. Every time we get into this zone, we do have a pretty significant sell-off. And going back to current prices, what I'm looking for here is either a double top at this level at 78.04, or we establish a lower high somewhere in this 75.30 zone, or right where we are now. And if we start pulling back from this area with that lower high from this previous high, then we're going to have a potential setup for a lower low on the much longer time frames, which obviously would be a very significant down move from current prices. So keep this in mind, just a scenario to pay attention to going into the next year or so. And looking at the M2 money supply here, I just wanted to highlight that we have been decreasing. The peak was in about March of 22 or July of 22, and since then we've been stepping down every single month. And from March to April, we saw a step down of almost $200 billion in money in the M2 supply. We haven't gotten the May read yet, but I'm sure it will be another step down. So we have stock prices going higher and the M2 money supply going lower, which obviously is increasing the two ratios that we just talked about. Moving over to individual stocks here with Apple and Tesla, you can see Apple continues to have bullish weeks, up about another %, another new high for the weekly close. Tesla, on the other hand, threw a doji and looks quite weak. I was really looking for that 302 push. You can see these previous highs. We had a very clear topping formation, and if we got into that zone, I would expect to sell off. But we hit this midpoint, and we started to get a little bit of a rejection there. Momentum still bullish, volume pulling back, RSI looking a little bit weaker. We're absolutely extended, and you would expect to start seeing this pull back now based on this candle. If we don't rally in the next week and get up to that 302 over the next 2 to 3 weeks, then I'll start to look for that pullback down to that 314 or at least 332. Moving over to Microsoft and Amazon. Microsoft had an inside candle, definitely not what you would want to see. Momentum pulling back, RSI definitely looking weaker. We've seen this before where we had a little bit of a pullback and then a continuation higher, and we could see that here, but we are extended. It does seem like we might see a little bit more substantial pullback. Amazon, on the other hand, looks very different. We're coming up to that 200 SMA here on the weekly chart. I expect that to be a pretty strong level of resistance at 302.55. Momentum still bullish. We got overbought conditions for the first time here on the weekly chart. And it doesn't mean it can't absolutely get up to this 144 EMA at 140.42. Certainly could happen. That would be a nice cap to this rally. Hit that zone, top out around this high from August, and then we start to see a little bit more significant pullback. But right now everything is still bullish and looks like it could continue. Moving over to staples and discretionary here on the weekly chart. Staples looked like it was going to rally. We got a rejection from VWAP and an inside candle here. It's still a bull trend and we're above that 144 EMA, but we are definitely consolidating in this zone now. I was really looking for a push up to 75.40, but now that we're back below 74 after that strong candle that we had last week, that's kind of interesting. Doesn't mean that we can't get a continuation up, but last time we saw a move lower, slight chop in this zone, we did end up seeing a bigger pullback before we got that continuation higher. Discretionary also looking weak. We had the big push last week. We got the doji rejection at 166.78. It does look like we might see a little bit more pullback next week. Momentum still bullish. RSI still very bullish. But it does seem like we're getting to the end of this extension. Moving over to transports, you can see here on the daily chart, we got that wick rejection this week, and then we're pulling back. Inside candle on the weekly chart, just like we've seen a few times. Last time we got a candle like that, we did have another 2 weeks or so of downward movement, slight up week, and then a continuation lower. We're still in this structure where we have 3 peaks here, still holding support in this zone each time. Eventually, I do think we are going to break higher, but it does look like we're going to see at least another week or two of downside here on transports. Moving over to sectors, not much has changed over the last month. You can see semis, consumer discretionary, and technology leading markets higher, communications in fourth. And then we have all the security plays here still in the middle. So not much rotation going on quite yet. And I might start including this on a daily basis to get a better look at overall markets, but right now it's not showing us very much at all. Moving over to breadth, we didn't talk about it in the Friday video, but you can see here it was another big move down on both of these charts. Does seem like we've seen at least a short-term high here after taking out the high from April on both of these charts. Waiting to see if we hold in this zone at the 200 SMA here on the 50, right at that 50 level. 200 days sitting at the 55 EMA and at that 49.79 level. Certainly could pull back down to the 200 SMA as well, indicating another couple days of potential downside. Maybe 43.50 is going to be the support area. Certainly possible. If we do set up a higher low versus the 2 previous lows, that would be quite bullish. And then we start to see this pick back up into a more normalized range, up into the 75, 76 area. That would be interesting. But right now we're getting a higher high setup versus this previous high on both charts. We're now pulling back, waiting for that higher low setup, and then a move back into more bullish territory. Moving over to high yields and government bonds, you can see high yields had a very bearish week coming off of the 55 EMA. We'd like to see this trend line hold and push back into this previous high zone just above 92.50 and above the 55 EMA. Does seem like that's going to happen. Could certainly break down from here at trend support and get a continuation lower. But so far this trend line has been holding and it'll be something to watch going into the Monday session. Looking at TLT, we had a gap up and another doji after the gap up and a doji last week. Certainly seems like we're getting a little bit of a push higher up to that 55 EMA on the weekly, sitting up around 106. Moving over to the 4-hour on JNK, I just wanted to highlight this after hours price action that we saw. We gapped up into the after hours, threw a huge wick to that trend line, and then rallied super aggressively. I didn't notice this in the Friday session, or it hadn't quite happened yet when I was making the video. Either way, this is interesting, and I'll be watching to see if this is actually a real move, or if this is just some weird after hours price action, and we'll get a gap back down into this previous close for the Monday open. But if this is a real push here on JNK, we might actually be looking for some more bullish price action on Monday. Moving over to the VIX here on the weekly chart, basically no change from last week. You can see the candles basically the same. Still looking at these lows from 2019 as a potential bottom at 1177. We're still well below all of these previous lows and back into this more normalized range. which zooming out here, you can see we've been in this range for a very long time with a couple of spikes here and there. But overall, this is actually where we are on a more consistent basis versus this elevated area that we've been in more recently. So we'll see how that plays out. Certainly seems like we are getting back into this zone and could see that for quite a while. And during those previous periods that we just looked at, the market did move mostly sideways, or it was grinding a little bit higher over time. Not really the big spikes up or down that we've been seeing over the last 2 years. Moving over to my accounts, you can see I was down a little bit more than $1,000. The NASDAQ was down about 1.5%, and my accounts were down about 1%. So not terrible, definitely could have done better. The IWM fell more than I thought it would, and I should have cut those positions and re-entered at lower prices, but I didn't, and that actually made up most of my losses. My NASDAQ positions did fine, and I could have performed a little bit better there. Overall, going into the Monday session, I am neutral to bearish. I have covered calls, protecting my downside at least a little bit, and I'm definitely not over-levered to the upside. Let me know down in the comment section what you thought of the Russian insurrection. Do you think it's actually over? Is it going to continue? And what does this mean for the war in Ukraine? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day. Moving over to today's jelly, in case you missed it, Elon Musk and Mark Zuckerberg are about to have a cage match. They both seem very serious about making this happen. Zuckerberg most recently won a Brazilian Jiu-Jitsu tournament, so he seems to be a fairly decent fighter. Musk, on the other hand, we don't really know if he has fighting experience. We haven't seen anything from him, but he is a very dedicated and successful person. I'm sure he will be able to figure out how to get some fighting experience and training in before a fight between the two. Absolutely hilarious that this seems like it's going to happen, and I'm sure the highlights will be all over social media once it's happened.